Hey everybody, Garrett Basecamp Trading. Let's take a look at gold futures today. Gold had actually started trending lower in the overnight. You could see that gold started making lower lows and lower highs in the overnight, and then coming into the US session this morning, we had a slight bearish lean. We were a bit choppy and a little sideways here, and you could see these wicks are indicating that you didn't have real good price movement originally, a lot of up and down swings back and forth, but the 5 and 13 had crossed to the downside. Momentum, fast and slow line had crossed to the downside. So we had a slight bearish lean originally coming in this morning with gold. And then we had this big high low reversal bar triggering gold break below the 50 EMA, and gold made a nice push down, got extended, made a little pullback, set up the bear flag, triggered that bear flag, and then just throughout the day continued to work its way lower. So again, this particular chart, looking at this chart, while not a straight steady down drop in gold, obviously you're bearish here. So as you're looking at your shorter time frame charts for setups, you can only be looking for shorts. There's nothing on this chart really suggesting that a long trade in gold would be a very good trade. All your moving averages are crossed to the downside, momentum crossed to the downside, fast and slow line ultimately even crossed under the zero line. Again, looking at this chart, no reason to think anything long in gold. You're just looking for short setups in gold. And it wasn't, like I said, it didn't just tank straight down, kept leaving bottoming tails. And so it was a little choppy on the way down. But again, short is the only direction to be looking at. Here's our Renko chart, which is our primary trading chart. We get our lowest risk entries off of this chart, and right in here is where we came into this morning's session. Gold started working lower. We actually had a trend reversal breakout right here. We had a higher high right here, a pivot. It's not a lower pivot low. The previous pivot low was right here. Then we put in a lower pivot high, broke to a lower pivot low. That initial trade would have been good for a couple of targets to the downside. Again, depending on how you traded it, anywhere from $400 to $600 to the downside. Then gold, this is where we were kind of leaving those bottoming tails on the 30-minute chart. So again, as you can see, this didn't just drop straight down, but it was looking weak on the way down. You had a potential setup right in here, had a slow line zero touch. This would have been a losing trade if you had taken it. This really wasn't a very good setup. This was a better setup here. We pulled back a little deeper, made this wick off the 50, and gold made another drop down. Now this didn't drop straight down either. You can see right here, you had this little wick right here. But if you had traded this, you could have grabbed at least your first $200 target and probably your second $200 target. And then right in here, we had one of the trade setups that I actually like, and this is what we call a double wick trade. Our wick off the moving averages. You can see we have a wick on these bars, and we're wicking off the moving averages in the general direction of the larger term time frame trend and in the direction of momentum. And this particular trade is giving us a little narrative what's going on in this area. Obviously, there's a battle happening in this price area. Buyers were pushing price up. You can see sellers had pushed down. Then buyers stepped in right here, left these sellers hanging, took control, pushed price a little higher. But then the sellers stepped back in, pushed price back down. Buyers stepped in, pushed it back up. See this wick right here? You see price pushed all the way back up to here, but then the sellers stepped in, closed the bar to the downside. That means the buyers lost the battle 2 times in a row right here. Typically, this is a nice strong bearish pattern on a continuation, and price very often, not always, but very often will continue to accelerate in this direction. Well, you can see in this particular case, buyers actually stepped back in one more time. This particular trade, because it wasn't working the way we wanted to, price kind of bouncing up and down before it finally closed up here. Actually, in this particular trade in the room, able to get out at break even because it just wasn't working. But then the buyers pushed price back up, closed this bar higher, but then the sellers stepped in yet again, pushed price down. Buyer stepped in, pushed price back up, but then the seller stepped in again, pushed price down, and took control of price. So this would have been, if you got out in here, even if you took a loss, let's say you got completely stopped out on the 5-bar rule, took a 20 tick loss right here, you would have lost a couple $100 per contract. You get back in, you had the opportunity to grab anywhere between $500 and $700 per contract on this next move down. Again, this is a strong bearish pattern. It shows that the buyers yet lost the battle 2 times in a row again. Momentum was bearish. Our 30-minute chart was bearish, and gold ultimately made a nice move to the downside. But we like to see these patterns again. They don't work every single time, like right there. It happened not to, but then again stepped in, showing that there's lots of selling pressure right here, and the sellers stepped in, took control, push price to the downside. And again, you had the opportunity to make anywhere between $500 and $700 per contract on this move down. And then we had a couple more continuation moves because gold was bearish. You started getting some bullish divergence right in here, and then gold pulled back. But a nice opportunity and a nice example of a double wick trade, one that worked, one that did not. But again, that's trading. Not every single trade works in trading, but we like to see these patterns on our continuation trades. And again, nice opportunity to make a little money on the downside in gold potentially.